Hi friends, check out the Bitcoin episode if you want to see the winner of that giveaway. This, of course, is the Ethereum video for today. My name is Rocky Outcrop. This is, of course, Ethereum USD and Ethereum BTC. Thank you so much for tuning in. I really do appreciate it. Actually, I'll just hide all the drawings on the chart there so we have a little bit of a cleaner look at things while we start off the show today. I got 2 dislikes in yesterday's video. No idea why. The people who disliked didn't tell me why. I wonder what it could be. We've had this downward trend on the go here. This is a 24-hour time frame, and as you can see, we had a high here up there on the 1st or 2nd of September, then a low down here on the 6th or so of September, then a lower high over here where we retested the 50 simple moving average, and then in fact a lower low over here. And while we did that, did we get the divergence? Now the MACD has a degree of divergence here, bullish divergence, looking at this area, and the Stochastics has as well. The RSI, it doesn't have it, the RSI being a little bit more important in terms of divergence, I would say, and more reliable as an indicator and more designed for that in a sense. And then you also have the DMI over here, which you can also look for divergence on. It's a bit more complicated, and as you can see, there actually is a touch of bullish divergence between these 2 peaks in the pink line here, because this right peak is lower than the left one, so there was less strength there, while we had more movement towards the downside, showing that there was a burning off of that strength of trend. Now, what does that really mean for us? Well, actually, currently, as we're sat here, the ADX is still, or the DMI is still showing us that the positive is and the negative, the pink, the negative is the pink and the positive is the yellow, are still kind of a chunk away from each other, and in the middle of there is the ADX in this red zone. This is kind of just chop territory for us. We don't really know. We don't have a full strength of trend quite yet. But the last time that we had a cross during a time when there was actually a strength of trend for us to look at was when the negative crossed over the positive here on the 4th of September or so, and that is still, you know, has to be sort of how we would label this, if anything, is that we're still in under the auspices of that until such times as something changes. What we have, if we look right in here on the 24-hour time frame and zoom on in, is you can see this yellow line is about to cross over this green line, and that of course is the yellow 21 exponential moving average about to cross over the 55 exponential moving average. That would be a negative cross for us, and maybe shine a light on the fact that perhaps we need to come down and test this 200 simple. Now the bullish divergence we've seen between these 2 lows, of course, is a warning sign for us and can't really be treated as anything particularly much other than that right now. If you want to have an example of such things, then look between this high on the 5th of August on Ethereum up to this high on the 15th of August, where we had this clear bearish divergence on the go here on all of these oscillators down below, and then what happened subsequently was another move towards the top side. So we came into these lows after that bearish divergence, saw the prices go up, and they went up 33% towards the top side in the face of distinct bearish divergence. What then ultimately happened was we got another dose of it, and then the prices went down the way, and actually that led to, in terms of percentage moves, a solid 37%, 40%-ish drop off, 35 to 40% drop off in terms of the price action over here. So you can see that while we have a degree of that, this could obviously continue. And how does that line up in terms of patterns and whatever else? Now, if I just put all this crap back on the chart, you can see that there's various intermediate time frame ones that we've had here, like this symmetrical triangle, full play out of that, this descending wedge, falling wedge, which we had a full play out of that move. This now, what we're currently in, is of course an ascending wedge as well, which we could get a full measured move off the back of that. Overall, what that also kind of lines up like is just the price action being in what is a large descending wedge as well, with these 2 blue lines that I've just drawn on there to give you a degree more context. Now we could come down here and touch these lower areas of the low $300 mark, then turn around again. Movements down below the 351 area are going to be key for us in terms of an inflection point in the market, because that's where this 236 is, and we know from previous, the past few weeks, looking at the chart here, actually the whole of this month, how important that number has been. Looking further over to the left, we also know that that represents a 50% Fibonacci line, and that moving down below that area again could see us yet again come in for the 3rd time, testing in around about this 618 golden pocket zone. If we were to do that, 3 times in a row, I'm going to leave it with you actually to decide how you feel about that in terms of the bullish and bearish characteristics of it, but I dare say people would feel very negative about the pricing should that happen again, in which case you could easily be looking down to these sub 300 targets, such as where we we find the 200 simple here in the daily time frame coming in at around about 260, or indeed if I jump over to this pitchfork that we have on the go, that we could of course, moving down past these low 300 targets where we see that wedge I've just drawn on the other charts, without all of the intermediate stuff to distract you. And we could be looking down towards the median line of this extension of the pitchfork in this parallel channel, or indeed where this 200 simple comes in at, and that is in those sort of around about 260 area. And let's just bear in mind that there is a Fibonacci retracement we can draw in from the lows on Friday the 13th of March area up to the highs here in the 1st of September, and movements that we have done, below 393 already, activated this, if you like, having gone down then below the 382 as well and just tested that, but not having so far achieved the 50% Fibonacci retracement, which would be more common of an area for it to turn around at than the 382 if you're just looking at statistical likelihood of things. And of course this wedge leads us on down to being able to test that 50% area, or indeed the 618 coming down to that 250 zone, 240 or so, to tie in with what we spoke about earlier on. Okay, that's really the crucial technical analysis that we really need to be aware of. Now, in terms of the positive case scenario, because I'm sure a lot of people want to hear that, movements out past this zone would undo this as a wedge quite quickly. Of course, it would also undo this this nature of this ascending wedge that we have on the smaller time frames. And we could be looking up towards these targets up above, such as the 50 simple moving average in there at 380-ish bucks or so. Then, of course, up the way, we've got our previous high in there at 391. Of course, we have this 236 in there at 393. Scrolling all the way over to the left, there's a massive Fibonacci retracement that you can draw in to just characterize the whole of this market, almost since its existence, really, with its all-time highs down to its subsequent lows over here in December 2018, when we kind of saw the markets for all of crypto kind of turn around after the year-long bearishness from the all-time highs. And the 236 on that comes in at 394 as well, giving you that key areas. Now that defines everything for us. So if we do move past this area up here in terms of just structure and looking at the highs and lows of things, we'd have a higher high coming in at 391 alongside the chance of us being able to do that without the bearish divergence. As you can see right now, the RSI is not a million miles away from the previous high. Perhaps we could come up, just like we don't have bullish divergence though on this one currently. Now we do have it on other things, but we also bear in mind that what I've already spoken about, this area of chop here for us. If we see these things cross over, could we see the DMI show the ADX moving towards the top side, turning orange and then blue for me on terms of my custom programmed one, if you want a copy of which you can get in the Discord. And will this then bullish divergence here on this MACD then eventually play out for us and get us a move towards the top side? Now, what would those moves look like in terms of measuring sticks? Everybody loves a measuring stick. Let's just draw one in here real nice and easy for us. If we did it just now, we'd be looking up towards the 420 blaze it zone. But let's just kind of hypothesize and say that in fact what we see happen is we come in and retest the lows and then break out subsequently to it, perhaps from one of these zones over here. Where does it bring us to? Let's say we do it from the edge of this pitchfork and we move up towards the top end. That brings us into $400 and takes out that 236 that we have towards the downside, takes out the 236 that we have towards the top side, and opens up the possibility of coming up for a $900 sort of increase in price, or a sort of $600 increase in price up towards $1,000, for instance. That would be your bull run, perhaps reinstating the bull run of this 6-month period here. We had two consecutive quarters of positive price growth, giving us that bull market since March, which of course we've been talking about on the channel that entire time. So yeah, that's going to do us for the dollar parent. Let's take a look. How long's this video? We're doing all right. Cool, nice one. Let's take a look at the Bitcoin parent. Still wondering about this head and shoulders? Yes, I know. Let's just stretch it over. There we go. Of course, we could say this is a failed pattern, but we did have a little test here with this wick, giving us a little bit of foreknowledge. Forewarned is forewarned is forearmed, as we spoke about. There's this zone, that we need to push past. It's a bit of a liquidity zone in a sense. Not really when you look at it just here. When you look back over to the left, you can see quite clearly there's this loads of price action in around this area. And you can see this fuzzy grey line running right through the middle of it. Zoom right back in again. You can see that fuzzy grey line coming in here at this neckline zone for us. So you can see that's a liquidity zone, despite the fact that we've had this rise up here without much price action in here. The VPVR would show a big drop off in terms of this, where we are just now on the Ethereum charts. Zooming over to the left, you see that kick back in again once you included all of the history of the asset. This, of course, being a key inflection point in the market, deciding where we could go short to medium term, of course, for this thing. And if we see the prices do break down below the 31 or the 0.03 area, I'd happily look down towards the 233 in there at 28, 0.028, and of course then on further down for a full retracement, coming down towards the 618 zone at 0.025, and that would be the negative case scenario. Now, of course, in terms of the positive case scenario, movements up above 33, 0.033 would be very positive for us, and we've not really been able to do that so far. Well, let's just be more accurate with it. 0.03325, just a little bit up from where we are just now. It's not out of reach, you know, busting on past this area, taking out the 21 EMA, taking out this 236 Fibonacci here, offering up the possibility of getting a 618 golden pocket retrace here, and perhaps even taking out the right hand shoulder of this head and shoulders here, and negating this as a possible pattern. Is it negated quite yet? I'm going to say no, given the liquidity issues I've already talked about in around this zone, and of course the potential for further movement in either direction still having not been fully disclosed for us yet, while the ADX is dropped down below or just coming into being around 15. In terms of the low term time frames, it's way low down here. Look back in the past in terms of the 4 hour time frame for Ethereum versus Bitcoin. How many times have we seen it this low? Once, not as low. This was as low over here on the 10th of June, so we'll check in, and then never any other time ever. So we've only got one example of when the ADX has been like this. Bearing in mind we've had that massive 6-month long movement towards the top side. Let's check in with what happened on the 10th of June 20. What was it? Was it 10th of June 20? Oh gosh, I'm going to have to double check this. You're probably just looking at it, you know, 10th of June 2020 indeed. Let's zoom on into the 10th of June 2020 4 hour time frame. Where are you? 10th of June. That's August. This is July. This is July. This is June. This is May. So the 10th of June in this area, bit of sideways price action actually on this one, but then you could say, oh well, this here was another area where we saw an extreme amount of just pure sideways leading to that ADX getting so low, and then what you can see here, especially if I stick it on log, you can see here that really, okay, so we had this massive, this is what happened, right? We had this big old symmetrical triangle here, really big, long symmetrical triangle, okay? And then we broke out of it after this period where we had really low strength of trends, you know, movement, directional movement. Now what we're seeing is having had this happen with a lot more volatility in the run up to it, doubling down in terms of the volatility pitch for us here. If you're making a sort of a pitch about the potential for incoming volatility on this thing, watch out for that, bear it in mind. I'm going to move on and do Chainlink. Want to see the winner of that Bitcoin giveaway? Check out the Bitcoin video. It's in there. If you enjoy this episode and got value from it, which I dare say you would have, then hit that subscribe button. If you're one of the people who hit the dislike button, let me know why you're hitting that button. I'd like to know. And all the best to you. I hope you have good trading out there. I really do appreciate you tuning in, spending this time with me. I'll see you next time. Longer episode than I wanted again. Whoops. Let's see if anyone's listening in here. No, nobody's listening in. Well, we're still doing it though. If you want to join me here and listen to these episodes be filmed live, you can in the Discord from time to time. Right, anyway, moving on.